This is the second clip in the economics exam preparation series, focusing on section A. So let's have a look at what the requirements are in section A. It assesses criterion 1, takes 45 minutes, you have 9 questions, but how they're arranged is a little bit different. You've got to select 6 questions, but you have 2 questions coming from Unit 1, Introduction to Economics, 2 questions out of 3 coming from Unit 2, Economic Management, and 2 questions out of 3 coming from the Global Economy. What I've done is taken most of the exam questions from the 2017 exam, but also, where necessary, have introduced some 2016 questions to give you a better overview of what is needed for each question. So here's the question one from 2017. Using examples to distinguish between 4 different types of economic resources and explain the income flow associated with the 2 types of those resources. So the first one that you should know about is raw materials, natural resources, things like wood, minerals and so on. You can see them on the screen. Important thing here is that income from these sources can be classified as rent, royalties and profits. The second one, labour. That's one that is most obvious to you, I expect. Workers, staff members and so on and so forth. So the income from that can come in terms of wages, commissions, salaries and so forth. The capital, that's probably one of the most important ones in relation to the production cycle. We're using capital goods here, using the production process to produce goods and services. Examples are endless, things like machinery, buildings, tools, etc., etc. Income from capital resources are generally classified as interest and dividends. And lastly is enterprise. That's the one that is the management and organisation and the risk taking by entrepreneurs that put all the other 3 resources together. Okay, also referred to as the factors of production, as you can see. The profits from this profit is the income flow from this resource. In terms of the question, you'd be expected to in 8 minutes, I would expect probably about anywhere between 10 and 15 lines of writing. Make sure that it's spread out with paragraphs, maybe even some headings, and so on and so forth, so you can be communicating precisely, efficiently and clearly. Here's another question, again from the 2017 exam. 2 determinants affecting demand and 2 determinants affecting supply in a product market. Now I'm going to provide all of them, and this is basic textbook stuff. So what are the demand determinants, or the factors of demand that makes the demand conditions change? So they include things like the prices of substitute goods, the price of complementary goods, expected future prices, tastes and preferences, and that's probably one of the most common ones that are involved in these type of questions. The consumer incomes and the size and age of population. So they're all the demand determinants. So obviously you had to pick 2 of those. I would expect you to explain them and perhaps even give an example to give a full answer. Similarly, for the supply determinants, you've got the price of the good itself. The state of technology is an important one. The factors of production, and the most common one in Australian context is wages. They form a biggest part of the costs for businesses, especially in Australia. Taxes and subsidies, if they change. Here's a typo, I beg your pardon. Quantity of resources available, climatic and seasonal influences. For example, if we have a drought or a flood or something like that. So again, you've got to pick 2 of these and explain these in context, hopefully with an example. So that's question 2. Question 3. Explain the circular flow model and the relationship between 5 sectors of the Australian economy, and then using one example to explain leakage and one example to explain an injection. So what this is a theoretical model that explains money flows in various sectors of the economy. And I'm going to show you the 5-sector economy, which shows all the leakages and injections. Individuals provide resources, in return they receive income, and business provide goods and services, and which is classified as output, and individuals buy those goods and services, which is classified as the expenditure flow. In terms of the savings and leakages, I've got a nice neat table here to summarise that information. So obviously you had to talk about one of these sectors. Okay, let's look at the financial institutions. They receive savings from households, and an injection is then the investment of capital items by businesses. Governments is taxation, government expenditure, and for the international sector, the leakage is the imports, and the injection is the money that we receive from exporting products to overseas customers. Explain the relationship between the economic problem and the opportunity cost. Use a production possibility frontier diagram to explain the concept of opportunity cost. So in the first instance, you've got to explain that the economic problem is about making choices, and that stems from the fact that we've got unlimited wants and limited resources. So it forces us into a position where we have to make some choices to minimise our opportunity costs. So as I said, resources are scarce. We want to maximise our satisfaction and minimise the opportunities foregone. They're called opportunity costs, or sometimes economic costs as well. Here's a diagram which you can use, which you should use in order to get the full answer here. You can see that in this diagram here, we're producing either capital goods or consumer goods. And I've shown here, if you were going to go from position B to C, you can see that we're going to gain 15 consumer goods, the difference between those two figures there. But because we've allocated resources from capital goods to producing consumer goods, there's a cost. The opportunity cost of this decision is the difference between the original amount that we produced at point B and now the new position at point C. That means that we had a loss of 30 units, which is the opportunity cost of this decision of gaining 15 consumer goods has cost us 30 units of capital goods. So the alternative wants we forego are called opportunity costs, or as I said before, real or economic costs. Here's another question from the 2016 exam. Outline 4 key economic questions that all economies must answer. So explain that how a mixed market economy addresses a question of what to produce. So first of all, here I have the 4 questions. What to produce? Okay, that is largely influenced by consumers via consumer sovereignty, but influenced by governments as well. They can prohibit some products. I'll explain that in a moment. How many to produce? Again, that's determined by consumers and governments. How to do it? That essentially is left up to businesses, but governments do intervene. And lastly, for whom shall all this production of goods and services be directed to? The governments and consumers are the prime people in this decision. Now, the mixed market economy allows consumer sovereignty to allow consumers to choose what they buy, and obviously they will be going to be influenced by the price mechanism in terms of demand and supply and how the price will fluctuate. The other important thing here to remember is that governments can also be producers themselves by providing collective goods. They can prohibit some goods and provide some incentives like subsidies and startup funding. Right? So that is this is the second part of the answer of explaining how a mixed market economy addresses what to produce. So the consumers and the governments have influence here. Next question, talking about price elasticity of demand using two examples. One's elastic and one that is inelastic. So what does it do? It measures the responsiveness of the quantity demanded to changes in price. We use the revenue method to calculate elasticity, that's the responsiveness that I was talking about. So when prices rise and revenue rises at the same time, it's inelastic. So that's what we classify as inelastic. In order to provide examples, I suggest that you relate it to determinants of demand elasticity. So you can see here I've got the determinant down here, luxury, is it the luxury or necessity? So an elastic good would be something like perfume, something that's not necessary, as opposed to milk and petrol. They're probably examples of more inelastic goods. For something that has some close substitutes, there's lots of close substitutes to chocolate bars, but not for petrol. Therefore, that enables you to classify in terms of an elastic good and an inelastic good, and so on and so forth. You can see these other determinants here. So the other common one to use is, okay, in terms of a snack, that's an elastic good, but if I'm consuming alcohol or cigarettes, that's an addictive substance, and therefore that would be another example of an inelastic good. The other type of questions that you could get in this first part of section A would be these ones here, and you can pause and have a look at those. They're from exams from previous years. I suggest that you have a look at some of those and practice those as part of your exam preparation. So that is the first section for, or the first part of section A, okay, to do with Introduction to Economics. Now I'm turning my attention to the second part, part 2, which looks at economic management. And here's a question. Outline each phase of the business cycle and explain the characteristics of two phases of the business cycle. Straight away, of course, I'm going to use a diagram as I've shown here, and that neatly shows the four phases. So peak, contraction, and also called a downswing, a trough, and you've got an upswing or an expansion going back up to a peak. So the problems that we've got when at the peak, we've got high economic growth, which is not necessarily a problem, but it can lead to high inflation. And when we in a downturn or in a trough, we've got low economic growth and high unemployment. So it's a stock standard question, that one, but it does come up quite often. Alright, let's look at the next question. With reference to examples, describe the role of the government in a modified market economy. So there's a number of roles here that the government performs. So in the public sector, governments provide health, welfare, education, etc. They also can allocate resources or reallocate resources by way of funding certain programs, allocate grants, allocate subsidies, or give straight cash payments. And on the taxation side, they can tax people in terms of direct tax, like income tax on your income, or they can do it indirectly via GST or the petrol excise. They obviously also provide goods and services like infrastructure, transport and communication. And governments also redistribute income commonly done via welfare payments and a progressive taxation system. And they also use fiscal and monetary policy to stabilise the economy and to achieve sustainable growth. So if we refer back to the earlier question where we had to look at a economic cycle, they try and cut off the tops and try and cut off the bottom so to avoid the extreme level of inflation and extreme level of unemployment. Here's another question. Fiscal and monetary policy. So we're looking at the differences between here. Expansionary fiscal policy is where the government increases the government spending and or decrease taxes to inject more money in the economy. So the government can obviously do that by a number of means. If you were listening to the previous questions, that would have told you the ways that government can influence government spending, and by various taxation means. They can change taxes to decrease taxes to increase the amount of money flowing in the economy. Monetary policy is about the setting of interest rates. So in this case, if we talk about expansionary policy, we're talking about lowering interest rates to again stimulate the economy. Try, if possible, to give examples of perhaps of your knowledge of current monetary or fiscal policy settings, and that will just add value, and you're able to demonstrate high levels of understanding, which is what obviously you're after in order to achieve A standards. Here's another question, and that's fairly prevalent in today's context. Okay, the prevalence of underemployment. So what's the difference between that and normal unemployment? So under the present guidelines, a person willing to work and unable to find work is classed as unemployed, and that's even if you have 1 hour of work per week. So it means you're off the dole queue and you're employed. But the obvious thing there is that you may not have enough income, and therefore you want to have extra employment. So if you're on that boat, you are then underemployed, and the level of underemployment currently in our economy in 2018 is a problem, which, along with lower wages growth and increased levels of poverty and homelessness, is a real social issue. Other important thing here to say is underemployment represents the underutilisation of labour resource, the same way as unemployment is as well. Here's the next question. It says to define inflation and differentiate between two causes. To demonstrate extra understanding, wherever possible, you should include a diagram, and I have already one here ready to go. So inflation is the increase of rising prices measured by calculating the rate of CPI from the previous period to the current period. Okay, now that I've talked about inflation, I'm now going to talk about the first type of inflation. That's demand pull inflation. So that's where the productive capacity is exceeded by more buyers in the market, which pushes up demand, and you can see here that we've then got a higher price at a increased output. Now the other style of inflation is cost push. Cost push is caused by increases in factors of production, for example, like increased costs from wages, for example, and what then happens is that the increased costs to the producers is passed on to customers. So in this instance here, we've got increased costs, for example, wages, or the Australian dollar has gone down, which means our imports are more expensive. So their imports have increased. That's passed on to customers in terms of higher price. That's in P1. But importantly here, or significantly, that we've got a lower output. And that's a real danger of excessive wages growth in our economy. Next question. You've got to present the formula for aggregate demand and explain two factors that affect consumption expenditure. Now this should be stock standard stuff. So we've got consumption, plus investment plus government spending plus exports minus imports. Now, importantly, consumption is 50 to 60% of Australia of aggregate demand. That's an important thing to note. In terms of the factors that may influence the consumption is consumer expectations or consumer confidence. If they are confident, then they're more likely to spend. And that's usually the case when we have good economic times. The level of interest rates, if they're lower, that means that they can borrow money to buy goods and services. Alternatively, their incentive to save money will be decreased. The distribution income is also important. So if the gap between the rich and poor is bigger or widening, that means a bigger proportion of people are unable to buy basic goods and services, and that can obviously have a impact upon consumption as well. Other questions that you could get in this section, again, these have come from past exam questions. And have a look at those. Pause the video and perhaps use these questions as practice. The third part of section A, where you again have to choose 2 out of 3 questions, is the global economy. Let's look at the first question. Explain the concept of comparative advantage, and using one example how Australia might benefit in trading with another country or trading bloc. So, if a country can produce all goods more efficiently, then the country should specialise in producing that product in which they have the lowest opportunity cost. And this can also be the case if one country has absolute advantage in both products, but if they have a low opportunity cost, then that particular country should engage in that, or should produce that. And then what happens is that by specialising in that producing that particular product, overall production can then increase for both countries, and then the surplus is traded, and that's the advantage of doing this. Here is a numerical example that you could use to explain your answer, and I would suggest that you do that if you have time. You can see here in this example, in this example they've worked out the opportunity costs. So in this instance, the country with a low opportunity cost, they should produce that particular product. So in this case, the bakery should make the pastries, and the pizza parlour the pastry here. Okay. Again, if you have trouble understanding what I've said, stop the video, have a good look at what these mean. But it's good to have this sort of table analysis to help you demonstrate that concept. Here's question 9 from 2017. Describe the difference between the appreciation and depreciation of the exchange rate and the likely impact of an appreciation on the Australian dollar on the balance of trade. Like with most questions, I try to use an example of a supply and demand diagram. You can see here that if you go from S1 to S2, it means that there's been a depreciation. So we've got a lower exchange rate but at a higher supply of Australian dollar. So this can happen either when the demand for the Australian dollar falls, or the supply of the Australian dollar increases, and as I've shown here, that will result in a depreciation at a lower depreciation rate of P1. What happens when the demand increases? Then if the opposite occurs, then we've got an appreciation occurring. So if you go from S2 to S1. A higher Australian dollar means imported goods and services are cheaper and exports are more expensive to overseas customers. So what that will mean is that the balance of trade will get worse. It will decline because we've got uh, lower levels of exports and higher levels of imports. So our balance of trade will decline, will decrease. If you use some numbers with this, that will also be helpful to explain your answer to demonstrate high levels of understanding. Here we have some questions from 2016. The difference between a tariff and a subsidy. A tariff is a tax on imported goods and services, whereas subsidy is a payment from the government to assist in the production of the delivery of that good or service. Important thing to note here is that the service or good or service will be more expensive if a tariff is imposed, and therefore consumers, governments and businesses will pay more. A subsidy has to be financed by government taxes. This means that increased taxes equals less disposable income and less discretionary spending by all sectors. Next question, globalisation. Using one example of the Australian economy as evidence that the global economy influences the performance of the Australian economy. There's lots and lots of things that you can say. First of all, you need to have some definition of globalisation. So we've got increased interconnection via lots of extra trade, but importantly also there's lots of movement of labour. Australia relies on a lot of foreign capital, and we have lots of cultural change as well. Importantly, globalisation is increased production of goods and services. Increased international trade means that we've got exports of more commodities. We've got increased labour mobility, which means that lots more people take up jobs in other countries, either in Australia or abroad. We've got a higher level of specialisation production of goods and services, but we seem to have fewer suppliers, and sometimes for some products there's only one or two world suppliers for a particular product. There's a lot more reliance and levels of foreign investment in and out of Australia. And as you know from your balance of payments section, that Australia relies very heavily on foreign investment to balance our books. We've got a greater dependence on other trading partners, particularly China and the US. And there's an increased number of multinational companies. So there's lots of multinational companies operating in Australia, for example, McDonald's and Starbucks, just to name a few. There's lots of others examples that you could have, but I've pulled these out just to give you an idea of what you could be saying and what examples you could give. Next question, the structure of the current account and what's the relationship between the persistent current account deficit and foreign liabilities. So first of all, I would say that all foreign currency non-reversal transactions are the ones that are calculated in the current account. The reversible ones are calculated in the current account. So what is the composition of the current account? Well, we've got the balance of goods and services, so that's for the level of merchandise exports and imports for both goods and services. And to that we add the net primary income flows, and that consists mainly of interest, dividends and profits. And I'm going to straight away tell you that the interest payments on our foreign debt is what causes us to have a big current account deficit every year, and that is the answer to the second part of the question that's been asked. The other part of our current account is secondary income flows, things like foreign aid, foreign worker wages and pensions. Now, as I was saying earlier, that we have a persistent current account deficit due to a high level of foreign incomes in the form of foreign debt interest, which leads to increased foreign investment and foreign debt required to balance the deficit in the current account. So it's a never-ending cycle. But overall, the level of foreign liabilities, or foreign debt as it's also called, tend to go up and up and up, and our interest payments, commitments also go up. What are some other questions? Again, you can pause and have a go at doing completing some of these as practice. But this is now the end of section A. It's been rather a long clip. Hopefully that's been useful to you. I would advise you go to task and download and copy the relevant exams, especially from 2016 and 17, to give you the context of what I've just gone through. But hopefully it's been useful for you.